Welcome to Bruce Talks, the show that's all about making crop insurance make sense. I'm Bruce Lantzky, a crop insurance agent with over 25 years of experience and a producer right here in Northeast Iowa.
All right, guys. Hey, for today's topic on Bruce Talks, we're going to turn a little bit out of the upper Midwest, and we're going to work on a topic that is rather new for 26. It's going to be a product called Clip. This episode, it's not going to be for everybody. This product's only available in a few states, but for those states where it's available, I'd highly recommend at least investigating this product. And with that, I want to introduce our first official guest on Bruce Talks. I want to introduce Byron Lindsey. He's from Harrisburg, Arkansas. He's a co-agent with Momentum Ag. He's got 10 years of experience, got his own farming operation, and fairly knowledgeable about this new CLIP program. With that, hey, welcome, Byron. How you doing?
Doing good, Bruce. Thanks for having me.
Let's just jump right into this thing. What exactly is CLIP?
CLIP is Crop and Livestock Income Protection. It's an endorsement that tags on to your federal crop policy that will attach to your policy and kind of an umbrella policy at 85%.
This is an individual county plan, so.
Yeah, this is a little different from the ECO-SCO. ECO-SCO is a county area plan where CLIP is a individual producer's APH. This goes off your farm and your yields.
We don't have to wait until the spring to figure out what everybody produced?
No, sir. So as soon as you finish harvesting and you get your tickets together and you figure your yields up, if you think you have a claim and you get them to the adjuster and the adjuster can get them worked up and get you paid as quick as they can. You don't have to wait till April, May, June for these area county-based plans.
Where are we able to write this product at?
It's actually starts in the Dakotas, works its way from the Dakotas down to Nebraska, Kansas, Oklahoma, Texas, and then kind of works over to the southeast, picks up Arkansas, Louisiana, Mississippi, Alabama, Tennessee, and Georgia. It's in places where the RP policies tend to be higher than your Midwest states and gives the producer a chance to buy a better level of coverage.
How is this working to where you get a better level of coverage? How that CLIP product acts as an umbrella?
Yeah, so CLIP will tie on to your multi-pair policies. You'll need 2 crops that are revenue protection policies. Both of those crops have to make up at least 10% of your liability for your operation. This policy tends to work a little better with the more diversity you have. The premiums are cheaper if you have 3 crops compared to 2, but you can buy it if you only have 2 crops.
In this chart, it's showing that you have soybeans at 60% RP and corn at a 75% RP, but this CLIP is filling in as if each of those policies was at 85% and is looking at a total dollar revenue at 85% based on all 3 of these crops. Am I right?
Yes, sir.
It kind of fills in the holes, and if there's a shortfall in the total overall revenue, then that's where the CLIP's going to shine very well for you.
Yes, that's where you could possibly pick up a CLIP payment. Also, on the flip side of that, if one crop doesn't cut as expected and the other 2 crops blow it out the water, you may knock yourself out of a CLIP payment. Just because one crop falls below, the other 2 possibly could cut above the 85% and you not have a claim.
But at the same time, that means you've generated at least 85% of the total operations revenue, and 100%. You're still going to get paid on your crop that fell on its face.
Absolutely. Absolutely.
All right, Byron. So what crops? I'm up here in corn and bean country, so that's what we're looking at usually. But for guys out in the high plains and down southeast, what commodities are eligible to be put on with this CLIP?
RP policies with spring sales closing dates between January 31st and March 15th will be spring barley, spring canola, corn, cotton, dry beans, dry peas, flax, grain sorghum, spring oats, peanuts, popcorn, rice, soybeans, sunflowers, weaned calves, and spring wheat. The only thing about weaned calves is it's only available in the Dakotas. It does not come any further south than the Dakotas.
What about the fella that has a different crop that might not be on this list, but he still has a couple other eligible crops? Can he still do CLIP, and what happens to that oddball crop?
Yes, if you have 3 crops and one of those crops is not covered under CLIP, you can take the other 2 crops and just throw the non-qualifying crop to the side. It does not affect you other than your premiums may be a hair higher, only having 2 crops versus 3 crops.
And I'm assuming I just thought about this then too, as you were talking there. If you have 3 eligible crops, but you only wanted to list 2 of them, you can certainly do that. Not quite sure why you'd want to give up the extra guarantee of revenue, but you certainly could do that if you chose, correct?
Yes, sir. Example of that would be if you were buying an 80% on one crop and you were buying 65s on the other 2, you may not want it on the 80% that you elected. You may want it on the 2 with the lower RP policy coverage levels.
Give us an example how this thing works premium-wise and why this might be a good thing to be looking at.
We've got an example here comparing RP versus CLIP. We're going to start in Alabama in Coffee County. We're going to go on the second line where you see corn and soybeans. You got a 100-bushel yield for corn at a projected price of $4.52. And 85% RP coverage is going to cost you $68.50. For peanuts, you have a yield of 2,800 pounds at the price. 85% coverage level is going to run you $72.23. If you go to the top line, same crops, same yield, same projected prices. Both of those policies are at 60% RP coverage levels. Then you have a CLIP coverage level right beside it at 85%. Your 60% RP premium would be $16.99 for corn. And if you add a CLIP to that, an additional $11.38 would get you to an 85% revenue protection policy for a total of $28.37. Same thing with peanuts. You got a 60% coverage level that costs $13.99. You add CLIP to it to get you to 85%. That's $17.29. When you add those 2 together, it comes up to $31.28. So a comparison, an 85% straight RP policy for corn is going to cost you $68.50. A CLIP policy with a 60% underlying policy plus CLIP is going to cost you $28.37. Right at $40 an acre cheaper with an RP policy plus CLIP than just an 85% policy.
Quick summary of this, I guess, is how I'm looking at it is if you're normally buying 85% RP, which, with the amount of the premium, very few people actually do down in your area, you're looking at about $70 on average premium, regardless of whether it's corn or peanuts. With this CLIP, you're buying a 60% RP, but then they add in the extra revenue. You're looking at $29 an acre. Basically, over half to get the same dollar revenue guarantee. And what you're really giving up is that individual coverage. It's more of a blanket total dollar amount of revenue on your individual production. Am I right?
Yes, sir. 100% correct.
Let's say that $30, that's still a good chunk of money. What if I only wanted to jump up to 80%? Is that an option, or do I have to go all the way up to 85?
Yeah, 80% is an option. You can only exceed 25% of your RP coverage. If you're at a 60%, 25% gets you to 85%. So if you buy a 50% policy and you want 25%, you would only get 75% of CLIP. But CLIP will only allow you to go up to 25% above what your existing coverage.
And that probably reduce that overall premium a little bit then as well, if I'm a little bit premium averse or needing to have a certain dollar amount. That might be another option as well, instead of just going straight up to 85%. Am I right?
Right. It's not going to make it a ton cheaper or anything, but it will be a hair cheaper. Yes, sir.
Let's just summarize this a little bit here. CLIP's going to be new for 26. It's available in the limited states, the Dakotas down to Texas and in the Southeast. Really what this is it's an umbrella coverage on covered commodities that's above your underlying RP policy. What this does is it provides an increased guarantee on your entire operation for a much more affordable premium. Total farm revenue is what's going to repay operating loans. As a former banker, that was important. If times have been tough and we're having to make some tough decisions, the ability to say, hey, I have this many dollars of guarantee available to get an operating line approved, that might be what needs to be done.
One thing I'd like to add is this policy is not for everybody. This is not a cookie cutter one model fits all. I'm going to do what my neighbor does. Or you have to look at this at an individual level. Just because, Bruce, you're doing it doesn't mean I need to do it, or because I'm doing it doesn't mean you need to do it. But it is something that everybody needs to take the time and look at it.
This is based on individual yields. I think that's important. It's not based on the county's actual yield. It provides some more individual protection. Losses can be worked at harvest. You don't have to wait 6 months until the county yields are recorded and released the next spring. With these tight operating margins in many of these eligible areas down south there have had some difficult years, CLIP provides a way to add some additional revenue guarantee for a reasonable premium. Like Byron said, this isn't necessarily for everybody, but I think it's definitely worth taking a look at. Bankers will appreciate that the product's based on your individual yields, and they can receive an indemnity much quicker, and you don't have to wait on that unknown county yield until they're announced. I think the biggest takeaway on this is just be sure to investigate this new product and see if it's going to be a good fit for your operation. All right, this is going to be a wrap for today's Bruce Talks. We covered the CLIP program and how this is going to be potentially a very good fit for producers in the eligible areas to improve their revenue guarantee. I want to thank Byron for joining us today to explain the benefits of this product. If you've got any questions on CLIP, hey, give Byron or myself a call or reach out to us on social media. Be sure to join us next week. We'll break down another timely topic that's going to impact your farm, from risk management strategies to government programs to crop insurance, so you can make the confident, informed decisions you need for your operation. Thanks for tuning in to Bruce Talks, where we'll keep your farm future in focus. See you next time.